It's been decades of build-up, and finally July 2021 will forever be known as the very beginning of space tourism, because I'm sure you've seen it over the weekend. Richard Branson successfully completed his flight to the edge of space, and Jeff Bezos is about to do the same in a few days. So today I want to talk about how those two compare to each other, what's different between those two experiences, but also how they compare to what SpaceX is trying to do in space tourism, and how you can be part of this future, how you can invest in this space, which is space. You see what I did here? Yes, pun intended. Alright, there's a couple of angles I want to talk about today. One is I want to compare the three companies involved in the space tourism industry. I want to compare Blue Origin from Bezos, Virgin Galactic from Branson, and SpaceX from Elon Musk. But then also look at the investment angle. How can you benefit from this sector? How can you invest in some of these companies, which will be really growing massively over the next decade? So first, let's make a distinction of what we're talking about here. So when you look at the Blue Origin, the Bezos company, and Virgin Galactic, the Branson company, they are going to be taking people on these short flights to the edge of space, which is what we call the sub-orbital tourism. They're not actually leaving the Earth, orbiting around like on a real space rocket. And that compares to SpaceX, what SpaceX is building, and they'll be starting these flights from next year for private citizens. They'll be taking people on these multi-day flights with the destination like the International Space Station. And that really qualifies as orbital tourism. This is real space travel. I want to show you this chart here that the Financial Times put together, which really shows you nicely the mission profile of the Bezos company and the Branson company. And this is really what's happening here in July 2021. So if you look to the right side, you see the VSS Unity. This is the flight we have seen last weekend that Branson took, taking off from New Mexico, then going up to about 45,000 feet, releasing the rocket, and then vertically going higher at Mach 3, which is 3 times the speed of sound, until they pass this line of about 80 kilometers in the air, so about 50 miles at altitude, which the FAA and the NASA in the United States define as the edge of space. And then once the rocket stops, they float a little bit for, in the zero gravity environment for a few minutes, and then they glide back down to the same runway, just like the space shuttle used to do. They land like a plane. On the left side, you see the new Shepard rocket. So that's the Blue Origin company, the Bezos outfit, where this is all automated. There's no pilots. You have people sitting on the top of this rocket, which vertically takes off and then goes past this imaginary Kármán line, which is 100 kilometers in the air, which is the internationally recognized level where space begins. And then the capsule separates there. Again, they have this zero gravity flight up there, and then eventually they come back and land on Earth. So really, this is the differences here, and we've seen it in the bickering on social media. You remember that Bezos was the first one that announced this flight early June for July 20th, which is the 52nd anniversary of the Apollo 11 landing. And then Branson stole the spotlight from him by announcing that he would in fact be going to space first 9 days before him. And clearly Branson is raising money off this, and we've seen it on the back of it. The following day, he obviously already announced an equity raise in the capital markets, because he needs to fund the development here. He doesn't have as much money as Bezos does to kind of fund the company at will, so to speak. So when it comes to the pricing here, what do 2 or 3 companies are kind of trying to do? So we know that Virgin Galactic is going to be charging somewhere between $250,000 $300,000 per seat. And then eventually they want to build these all around the world and get the price down to something around $40,000 for that kind of a flight. Blue Origin, Bezos, really, his company didn't announce any type of pricing yet. Probably going to happen later this year after hopefully a successful flight. But we know that somebody already paid $28 million to sit on that first flight next to Jeff Bezos. And when it comes to SpaceX under Elon Musk, we know that they'll be charging $55 million for a trip to the International Space Station, which is about 8 days. So there's going to be about $7 million per day to really go to space, go to the International Space Station, stay there for a few days and come back. So that's as much as the pricing goes. Let's talk about the investment angle for a minute, because if you want to invest in these companies, it's actually not all that easy, because Blue Origin is private. SpaceX is also private, so you really have just Virgin Galactic to put money in. And if you did that last week, the week before the successful flight, then the coming Monday you would have immediately lost 17%, because Branson used this success over the weekend as an opportunity to raise more capital. Virgin Galactic immediately announced a capital raise of $500 million, which for them is the right move. They do the same thing that, for example, Tesla did when the stock price ran so much to the upside, and they use this a couple times to raise more capital. Virgin Galactic is doing the same thing. The stock price more than doubled over the last 12 months, and so they're doing the same thing. They're raising more capital because they need the money, unlike somebody like Bezos. So the trick really to invest in space tourism, but also space in general as a sector, is really to pick an ETF that's going to give you a lot of diversification, unless you want to manage this yourself. But the ETF really does this for you. And when you look at the universe of ETFs, what's available out there, there's really 3 ETFs that you want to pay attention to. One is the ARK Space Exploration and Innovation ETF, which is run by Cathie Wood. Then you have the Procure Space ETF, ticker UFO. And then you have the Kensho Final Frontiers ETF, ticker Rocket, ROKT. And so I looked at the details, the expense ratios, and what's actually in these ETFs. And I think the ARK ETF and the Kensho Final Frontiers are the best versions, the 2 out of 3 that I would personally pick. So let's look at the details here. The Space Exploration and Innovation ETF from the ARK family has been really successful lately. And this is the family of ETFs managed by ARK, by Cathie Wood. All of her other ETFs have really killed it over the last couple of years, and this one is no exception. So I want to show you a couple of pages on Bloomberg here that kind of shows you the details of what's actually in this ETF and what you can expect by investing in this ETF. Here on this first description page here, you see in the red oval here, in the red circle, the market cap is $622 million. So that's, a lot of assets under management for an ETF that's only been here since, and you see this to the right, the inception date was end of March. So this ETF has only been here for a few months, and it's already amassed $630 million in assets under management. So that's a lot of money. And you see the expense ratio, bottom right, is 0.75%. So this is for each $10,000 you would invest in this ETF, you would pay $75 in terms of yearly fees to them to manage it for you, to do the research, reallocations, kind of manage the ETF for you. But then if you look to the other page here, which shows you the holders, what's actually inside this ETF. So you see on the right side, again in the red circle, there's 42 companies that are part of this ETF. And underneath you see the percentage net. So that's the weightings, how much weight each of these companies has in this ETF. And so you see number 1 at 9.65% is a company called Trimble. They focus on global positioning systems, satellites, telecommunications. But in number 2, I was really happy to see this there, is the 3D printing ETF. Now the 3D printing, there's been a lot of debate about 3D printing and how important that's going to be for space exploration, for printing some of the rocket parts, but also in space, how 3D printing will eventually help us conquer Mars and outer space. So 3D printing, I'm really happy to see it here. And then you have the usual suspects of, Iridium Communications, L3 Harris Technologies, Lockheed Martin, JD Logistics, Thales, a lot of industrial, aerospace, defense, telecommunications companies. The company where I was kind of surprised, you see Boeing there here as well, number 13. At number 15, you see Netflix. And I was surprised to see Netflix in an ETF that focuses on space exploration and innovation. But the debate here was, the argument from Cathie Wood from ARK was that as we improve access to the internet, to broadband, by putting more satellites in space and just covering Earth better in terms of reception, in terms of satellite communications, broadband, internet, well, Netflix as a leader of streaming will be one of the beneficiaries here. So this is not just purely companies that are allowing us to go to space or space tourism, but this is companies that will benefit from the buildup in this space. So again, ARK, a great ETF, this Space Exploration and Innovation ETF, I think is a great name to have in your portfolio, where you should see the benefits of this over the years to come. The second ETF I want to talk about is my preferred vehicle here, and it's got a really cool ticker name. It's Rocket, ROKT. But again, let me show you this Bloomberg description page here, which will give you the details. So ROKT is the ticker. It's the SPDR S&P Kensho Final Frontiers ETF. So again, an ETF that focuses on companies that are investing and innovating in exploration of deep space. What I like here about this ETF, again, bottom right, you see that the expense ratio is only 0.45%. So that's about 45% less than the previous ETF, than the ARK ETF that I talked about. And also the inception date here is late 2018. So this ETF has been here for much longer, and it's a well-established product on the market. But again, looking at the components here, what I like here is that Virgin Galactic is actually number one. So for all of these people that are thinking or thought about investing in Virgin Galactic, and we just talked about the 17% drop the day after that successful flight with Branson, the stock will recover eventually. I'm not sure what this is going to settle, but I would love personally to pick up Virgin Galactic lower than it is here. So if there's going to be a more meaningful sell-off in the stock, I would want to pick it up. But I'm quite glad to see that it is in this ETF, that we see it as part of the rocket of the Kensho Final Frontiers ETF at number one with 5.35%. So this is not a huge weighting, but it's there and it's number one position. And then you have the usual suspects. Again, a lot of companies we have seen in the previous ETF, some others. You have L3 Harris Technologies, again, Iridium Communications with the satellite networks, Teledyne, Maxar Technologies, again, a heavyweight, Northrop Grumman, a lot of defense, aerospace contracts, government contracts, Lockheed Martin, Honeywell, Aerojet Rocketdyne, again, which they make these rockets, right, that power all these ships to space. For NASA, they have a lot of government contracts as well. So again, this is an ETF that I think is a lot cheaper, is established, has been here for a while. It doesn't have a ton of assets under management, but again, offers you that diversification, catches the Virgin Galactic company as number one holding, so that gives you that exposure as well, and doesn't give you that volatility that you would otherwise have by investing only in Virgin Galactic. And again, remember, these are growing sectors. This is kind of a new deep space exploration type of investment products. With the ETFs, it's a bit more conservative because you have well-established companies in aerospace, defense, telecommunications. But don't put all your portfolio in that one basket. Don't invest everything in space tourism, so to speak. Anyway, thanks for hanging out so much on a topic and sector that's really exciting. For me, I personally am really excited that finally this is happening, because we've been waiting for so long for really the opportunity to travel to space, to discover, for regular people like you and I, to kind of have the ability, even though it's a lot of money, to go and see what Earth looks like from high above. So super excited about this, and I'm certainly going to be an investor in this theme. Anyway, I'm going to have to run. Gotta go and book my ticket, my seat on Virgin Galactic. But thanks for hanging out with me today. Make sure you give a like to this video. That's going to help the YouTube algorithm, help the channel become more visible. Subscribe to the channel if you enjoy this type of content. And I'll see you in a few days.